right now very pleased to have with me one of the foremost experts and analysts on silver, gold, precious metals, David Morgan from the Morgan Report, which you can find at, here's a guess, themorganreport.com. Themorganreport.com. I'll tell you about something we're doing with him in a second. But David, one of the things you were just mentioning about, and this is where I think for people interested in particular investment subjects, they need someone like yourself. Like, I got a lot of other things to do in the day. I'm sophisticated when it comes to this subject, but you're spending 24 hours a day, and I don't say that casually. People got to know that an analyst like yourself is absolutely no fun in life, because you live, eat, and breathe this stuff. You know, you're always on and looking around. And one of the things I know you guys do is you actually go to the mine sites. I mean, everyone says, hey, can you find me an up-and-comer? Well, you go and walk the site to figure it out.
Absolutely. In fact, in the June issue, which I gave you a preview of, Michael, there were two projects. Luckily, they were fairly close to where I'm domiciled. But nonetheless, it takes time, effort, planning. And, you go, and basically these were both situations that are not suitable for our website members, but they're aware. One is a new technology in the mining sector, which could have merit. The guys are very sincere. They're the real deal. I mean, all that checks out. They're very low on cash. It's just not appropriate to put any of the readers of the Morgan Report in there at this time, but they're aware of this technology and what it is. And, I know you read it, Michael. I prefer if you don't announce what it is. But, that's like a half a day. And then this other project was, I would say, mediocre at the time. They have one that's like, sets my fire going. However, it's in a jurisdiction that's so restrictive on what can be done that it's really, it's not uneconomic, it's economic, but marginally so because of the restrictions. So, we tell our people that, look, here's two places we went, this is what we discovered. And, if someone wants to investigate further and decide it's worth the risk, that's up to them. But they have my blessing or non-blessing, I say, not at this time.
Let me ask you about when you're looking at a market like this, at this stage in the market, and obviously there's so many array of along the spectrum from juniors to seniors. Do you start with looking at the seniors as a way, more safe? You already know what their reserves are, you know what their operating costs are, just an easier analytical set. Is that where you start, or what do you do in that way?
Absolutely. Yeah, absolutely, and we don't spend our most time there. I mean, we spend good time, and we do, as you know, Wall Street quality reports. But look, on a Coeur d'Alene, on a Hecla, on a Pan American Silver, on a Franco-Nevada, on one of the energy stocks that we have. I mean, these things are so diverse, so geopolitically spread out, and have such a strong base of financials that really you can do an armchair kind of analytic approach to those type of companies. Not that I don't know Ross Beatty, and not that we haven't been on some of the projects, but is it worth our time, money, and effort to go to every project? No, it's not. We can do it because it's a public company, the data's there, et cetera. However, you move down to the mid-tier and then, of course, the speculative categories, that's the ones that take the most time and produce the least results from the aspect of time. I mean, the amount of time that we take to look at all these things versus how many we actually like is it's a very low ratio. In other words, we only like 1 out of 20 or whatever it is. So a lot of effort there. And this is where we tell people it's a speculation, bet what you can afford to lose. And we've had companies like Western Copper that if you got in when we recommended it, became Western Silver. It was bought by Glamis and bought by Goldcorp. So you made a huge amount of money holding that stock. However, as it progressed, we upped the grade of it. In other words, went from a speculative situation to like a mid-tier because the company performed. But for every company that I can tell you about like that, I can tell you about 400 or 500 that are off the board now. So I'm not saying I get it right every time. I'm not saying that. What I'm saying is the market knows more than anybody. I adhere to that principle and only add if and only if that company starts to do what it says it's going to do. I mean, there's a lot of stocks there in Canada and around the world. I'm not picking on Canadians, but, you guys are the junior mining capital of the world, and I fully respect that. However, you've just got to be careful, and you've got to be smart. Most people, well, from my experience, most people want the penny stock that's going to, make up for all the investing mistakes they made their whole life and then they can brag about it. And believe me, the chances of that happening are like 1 in 4,000. And it does happen. And that's sort of a problem in a way, because that one person will think that they're really gifted, or their newsletter writer's the best guy on the planet or whatever, and they don't realize how lucky or how much the odds were against them.
One of the things I don't want to run out of time doing that. If you go to moneytalks.net, we've been talking to David's people, and you can just click on there right up front. There's a free David Morgan special report for Money Talks audience talking more about this. We never get enough time, obviously, in these brief radio interviews, but it gives you a real flavor of what he thinks is happening and where to go from here. So I just want to remember, and I'll remind you again, but it's moneytalks.net, as you know that. But go and click on, we've got it right up top there to make it easy, the free David Morgan special report. And you'll also notice probably that we continue to evolve our website there. So have a look. But that's the stuff I like best, is to get you better information in that way. Obviously, you can go to themorganreport.com also. So, David, let's finish with talking about what kinds of things you're keeping your eye on. You say, it's data-based. Obviously, you're looking at market action. But here we are. We're sort of getting into those levels. It seems to me that, according to your reports, which were correct, you think that $16 level for silver is a very important one.
Absolutely, and right now I think it's a 50-50 chance of bouncing up or going lower, and again, I just have to see more data. So if you're smart, what would I suggest? I'd suggest, one, if you haven't gotten in or you're looking for more of a short-term action, you would buy part of a position at that point and then let the market move. If it moves up, continue. If it moves down, you could either average down or exit your position. Depends on the person, and I explain that all in the videos that I do for everyone that's a website member. Michael, I'd like to just interject here that we are, in my view, entering the third leg up in Elliott parlance, and this is going to be the biggest move in the precious metals probably in recorded history. Having said that, I think it's very important that people really pay attention, because what's going to happen, and this is from my experience being through the last bull market, is there's going to be such volatility later on in the market. We're already seeing it now, from the 14 level to the 18 level, now it's probably to the 16 level. That's nothing compared to what's happening. And what's going to happen is a lot of people are on this bull market and they get shaken off, and they're going to be upset. They might make 100% of their money. They might make money. They might lose money, but they're going to get let me say they're not going to take a very seasoned approach to investing and speculating that most people don't have the ability to do. Excuse my arrogance, it's my life's work. And they are going to be in at the right time momentarily, only to see the market go down 3 days in a row and lose their position. So you really have to think this through. In my perspective, again, this comes from experience and, hundreds and hundreds and hundreds of subscribers that actually are on the right idea and approach it the wrong way. And I don't want anyone to lose out, because this next move is going to be humongous. And, for free and for fun, buy good quality. Don't worry too much about the speculations, and just hold through all the ups and downs until the very top. And, of course, when I call the top, hopefully I'll be like I've been on the last three and get it right. But I'll be one of the most hated guys on the planet, because there'll be so much emotion surrounding the precious metals when I say they're overvalued, because, and I'll give my reasons why, consider taking some profits. No one's going to believe me, and I say no one's tongue-in-cheek, but very few will be on my side. I'll get a lot of hate emails.
Oh, I know what that part's like. David, I just want to remind people that if they go to moneytalks.net, they can click on right there, pinned to the top there, get this free special report that we've worked out with David's office. Very kind of them to do this with us, because I love to get that information to you. So it's David Morgan. It's a special report to give a little more background here. And just go to themorganreport.com, themorganreport.com. David, as usual, an absolute pleasure talking to you. Terrific. Have a great weekend.
My pleasure, Michael. Thanks for having me, and you have a great weekend as well.